Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your host, Joel Elconin, and I have Scott Redler on the line. He's a chief strategist at T3 Live and T3 Trading Group. He joins us every Monday. Good morning, Scott. How was your Mother's Day?
Oh, it was great. Thanks for asking. It was beautiful weather. I was able to, enjoy with my wife and son and mother-in-law. Unfortunately, my mom was visiting my brother in South Carolina, but at least they were all together. But,
Okay.
it was good. It was really good. It's always nice to be with
All right.
family and friends.
Okay, well, we were talking about you last week, all right, and
Uh-oh.
we were talking. Yeah, it was all good, and we were talking about Alibaba, and
Right.
didn't play it in the earnings, but holy moly, man, when it took out that $80 on Wednesday, or excuse me, on Tuesday, and then came back above it, I must have said, "This is a red dog reversal. This is a red dog reversal." 9 times. Okay. Did I buy the stock or did I buy any of the calls? No. But I took note of, I've been learning from you. And could you just talk about, again, let's talk about that formation and whether or not you got to participate in it.
Well, what's interesting about that, I remember that, that day when it broke below 80, I think most people probably took advantage of the short side because it was
Yep.
acting so poorly. And went from 80, happened pretty quick, like 80, 60, below 80, hit a low of 77, 77, which pretty interesting, the lucky sevens, right?
Yeah,
But
I saw that too.
so that was, say again?
I said I thought about that too when I saw the triple sevens there or quadruple sevens because being a craps player and also in this decimal laden world, you just never know where the market's going to stop, and that should have been another clue when it stopped on 4 sevens, huh?
Well, a little bit, I guess. It's funny the way the world works, just like our bottom was, 3 6s
Yep.
on the S&P way back when. But just to give you a reason why the strategy works, because a lot of people thought, again, once it broke 80, the stock's done. It's going to be in the low 70s, high 60s, and that type of strategy is a washout strategy. I don't know if the forces at will knew that earnings were going to be good, but perhaps they wanted to wash out some weak holders and trap some more shorts, and then obviously their report was pretty solid. So it's always hard to get involved with a red dog reversal right in front of an earnings play because you have event risk. While we're talking about Baba, it's just interesting now because you have a big earnings gap, okay, which is catalyst number one now, after being basically battered and bruised, and then you had an inside day on Friday with the Goldman upgrade. So if this stock wants to rebuild and become a better trader, which I think traders would love to be able to actively look at it and trade it, it's got to hold now this earnings gap. So 84.91, is the pivot now that I think guys are going to try and be wrong against. They might do a regular reversal versus that at some point, in the next day or so, because people think, oh no, it's in the earnings gap. It's done, and get in there and come back above it. I've seen that before, which you could base the RDR around. So that's why you want to know that pivot. But for now, I'm actually long Baba, and I got back involved on. I traded actually from the short side when it gapped up on earnings into resistance around 89, and then on Friday I got back involved. And in my head, I'd love to be able to own it, see the way it feels and trades, and then if it holds that gap, goes sideways. I think there could be another trade if it were to clear Friday and the earnings gap high, which is 88 and 89.29. But the stock has so many shareholders that are upset because they got involved, all the upgrades, 125, 130, and then the stock failed. And so at this point, has a lot to prove, but it's back in the game. If it holds the gap, I'm going to try and stay in it. And then if it does a nice bull flag with the gap underneath it, perhaps there's more continuation above 89.21.
Let's talk about that a little bit because, for me, oh man, I mean, it's, I know, I mean, I'm pretty much, resigned to the fact that it's not going to come back and fill that gap, right? You need to get all the way down to 80, 85. One other, so you're nibbling here on the long side here. If it cut that low, if it started to get back into that gap area, 84.91 was the low on Thursday. Would you try and cut bait there and maybe try it again at a different level, or is this one of these trades where you're in, you may be in early, and you're prepared to add to it?
I don't know if I'm going to be prepared to just buy it all the way down, to be honest. I'll probably trade
Okay.
versus that, and if it actually acts weak today, I'll probably even cut a little bit off. If it doesn't go from right to green today, I'll probably go into more of a feeler. Like right now, I'm in a tier one. I'm hoping he doesn't get to that gap, that a high level momentum, there where like it holds above 86-ish, 87. Because if it gets to that gap, then I'm not to make a decision. If it gets in it, like you said, it's a huge, there's a huge air pocket there, and how much of that air pocket does it fill? And I'm not that committed to it where I'm going to be like buying it every 50 cents because, maybe it does fill the gap and the trade didn't work. So I'd rather, cut it there, be like that wasn't fun. And then if it, gets below it and comes back above it, then maybe, I'll re-put it on and then at least have a new point of reference, and then might be the clean out for it to then head higher. But at this point, I do not trust the stock, and I'm re-entering it with a plan. And if it holds that gap and goes sideways, it's great. If it goes positive today and closes green, I'll probably have more of it.
Okay. I just think everyone should really take note here that, he's in a position based on his analysis and his technicals, but he has a second plan, and he's going to either retry and buy to, if he's wrong. I mean, he's just not willing to keep adding down. It's not your maximum position size. And I think that's one thing to traders, you have to say, hey, I'm 25% position. This is 50. I'm 75. I'm all in. That keeps you in the game a lot longer. So let's just we kind of skipped right to the baba there, but just want to talk about that move on Friday. Boy, the market. We can even go back to Wednesday here. Whatever the case may be, we're right back up near all-time highs here. Do you think this market has enough get-up-go to finally make a new all-time high? And what are you keying on in today's market?
Well, I'm going to see how much of Friday do we hold. Do we hold higher? Do we hold the top third? You could actually look at the spiders. The spiders, you have a gap. The gap in the spiders with that trap, some shorts that were rolling it up from last Wednesday, and also, some people didn't have the chance to buy. Starts at 210.78. So same way like with the Baba gap, just say this different gap. If the spiders were to hold above this gap for a session or two, or do like an inside day, one or two of them, I would think that shorts that have rolled up would probably start getting scared, and people thinking we're going to just be back in the range or pull back would start to think, oh, I might have to buy if we clear this 212 this time. And then it would also give us a bigger platform to go up from. So for me, I'm hoping that we hold the gap, for a session or so, and then, be able to add to the indices besides stocks for a decent tradable move above the range, which we haven't had. Every time it's looked great, we've had to sell it. Every time the markets look like crap, sorry for my French, we have to buy it, and that's not the way momentum traders like to operate. But that's what usually happens in a range, to frustrate as many people as possible before you get a resolution and, nice continual type of action. So we could do the same thing with the spiders where it could try and go into the gap and go below 210.78 and like hit 210.50 and then close back above it, and then you'll know that the gap held and that's a viable pivot. So if just say you're long a lot from Friday, and we trade into the gap, you lighten up a little bit, but then if you put a low in the first 60 minutes, come back above it, then you have your new point of reference to trade against this week, and then the longer we stay in that elevated spot, the higher the probability, and the more confidence some bulls will have to have a tradable move above the 212.
Okay, let's move on to some stocks that kind of took the beats here off earnings. Looks like the selling momentum is kind of petering out here on Twitter. Got a little green bar on Thursday, another red bar on Friday. Got a long time to get a driver in this thing, but what's your thoughts on Twitter?
I think the whole social media area is a different trade now. You're not going to get a momentum move to highs that was taken off the table this earnings season. I feel like if you weren't involved during the report in Twitter or Facebook or any of those, or you got out quickly, now down here, they're worth feelers. Feelers are just quick trades. I'm actually in very small Facebook and Twitter just to have. I feel like, being short down here in the 37 area, it's probably not worth it. But being longs any size versus that 36.52, I don't think you need to be there either. Little 3 to 5 minute charts for both of these trades for cash flow. but it shouldn't be like your A setup because it's not an A setup right now. I think the Yelp takeover speculation helped a little bit. Goes to show you that you don't want to be short something, at the bottom of the range. Like the time to be short this thing was over the course of the past year or so as it stepped lower. But I think that kind of gave the group a little bit of a push, but that push wasn't held. But more importantly was if you knew where the gap was in Yelp at
Yep.
42.30, you had a really good trade there.
Do you get involved in things like that? Like the Goldman Sachs, Wall Street Journal reports Goldman Sachs has been hired by Yelp to explore sales. Do you? I mean, I know you got a lot of traders. I know you got a lot of aggressive traders you work with. Is it something that you get involved in, or is it something? Because I know it. You like to trade by your rules and by your technical analysis. How do you play things like this?
Well, when news comes out, there's definitely ways to figure out whether it really means something or not by watching the volume and seeing if the volume is continuous. Sometimes you get a quick little news flash rumor and something spikes up and then gives that whole move back within 5 minutes, and it means nothing. But if you get like a spike up and then after 5 minutes it doesn't pull back, chances are this could be something too. And if you combine that with levels, where and the name, it definitely there's money out there for that. With Salesforce.com last week, you had the first spike up and then it got halted and you could have been in it for that extra $3 with Yelp. You could have known how battered and bruised in the short interest, and that if once it got into the gap at 42.29, that there was an entire one to fill up to 50, and this is after 7 down moves, so that could have given you a little bit of confidence to play this one better if you knew the stock. And then also even with Twitter, like remember the Twitter when they released the earnings early, around 3:00. I know a guy on my virtual trading floor was like, listen, he's like, this is the same group that scraped the Microsoft earnings, a couple of quarters ago, so there could be validity to it, and there was volume attached, or at least that could have gotten you out of Twitter, before it got halted, or maybe even short. So if you're prepared and you know the name and you know that the news actually has a high probability of being meaningful, and you combine that with levels of volume, there's definitely guys that make a living doing that. I don't make a living doing that. I just from time to time will make some cash flow because I like to have things that are more in my control that don't have events around it. But if events and volumes around the name that I know pretty well, then I get involved. But you just have to know the situation well, because probably 9 out of 10 times it doesn't come true. It's just a trade, and some of them are quicker than others.
Right, and like for this one too, I mean, it did come out on Thursday. It held on Friday. With these kind of things, like if I had participated in it, boy, I'd sure like to hear something today or tomorrow or Wednesday, or something coming out pretty quickly, because a lot of times all the people that are anticipating, because I've heard as high as $55, and I've heard some people talk about 70. I mean, I just think coming off an earnings report like that, but you made a
Right.
lot of good points. Is there, with the market here near all-time highs, is there anything there that's still looking at appealing to you on the buy side?
Yeah, well, I think there are now some setups for momentum. I posted a chart on Netflix today. I know
Okay.
it's sometimes those are hard to buy, but you have an upper level channel. It's right there. If it were to get above like 577, today, or 576, I'm along a little bit. Maybe there's a momentum move that can get it towards 600. If the market's going to break out, it needs some momentum players. So Netflix could be one of them. Tesla, after we talked about it breaking the descending channel around 207, and on earnings, they saved it at 220, and then it was an inside day Friday. So I feel like it's worth watching. If that could break above 239.50, there could be a little bit more upside there. Amazon's acted decent. I feel like Apple has support to trade against. I don't think it's a momentum move, but you could maybe be long Apple versus like 123. So, you know what else? Let's talk the banks real quick. Cause,
Sure.
with the weakness in bonds and the weakness in the TLT, the XLF broke out on Friday, and I do think there are some setups in the banks. And I'm long right now Citigroup and Morgan, even though JP Morgan's best in breed right now. But I think both Citigroup and Morgan have decent setups to play some catch up, especially if this market's going to hold firm.
Okay, and with the market near all-time highs, obviously you might have some potential shorts on your radar. You want to share any of those with us?
I really don't. Near both all-time highs, and it's tested it so many times. Like I took spiders home short, as a hedge versus my longs, overnight just in case. They were down 45 cents this morning. I started covering some of them down 45 cents before my morning call just because I feel like I want to be long the market, but overnight you have to have some kind of hedges just in case the whole Brexit news or whatever wasn't taken, well. But I'm going to try and be long for this move high. If we're breaking out, why go against the tide? There could be names that don't anticipate, but I feel like that might be harder money than if we go above 21.20, 21.25 to 21.50. I'd rather find the best acting names than the underperforming shorts.
Let's talk about your hedging real quick. We only have a couple minutes left here. We're on with Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. Do you go dollar for dollar, or do you just I mean, we had a big move up on Friday, and why do you prefer the spiders over the S&P futures?
I trade the spiders, and I try not to trade the futures just because I'm up at 4:45 in the morning. If all of a sudden I was trading futures and I start staying up till 2 at night, I'll never sleep. So one of my rules is I'll trade the indice ETFs sometimes as hedges. So this way, once my positions are in, they're in, and then I'll deal with them the next day because I have to get some kind of sleep versus all night. But hedges can hurt. Hedges are great when you need them, but they hurt when they go against you. Like I wanted to be long on Friday, and I was, and I took the spiders as a hedge, and my spiders hedge, muted my entire up move. Where on that gap up, I really didn't make much money, and then I had to cover my spiders, get them out of the way, and then work into positions that I wanted to be in that didn't really close higher from where I bought them on Friday, and then you have to worry about taking them into Monday, Tuesday. So the spider hedge I thought I didn't take a lot of it, hurt because I was up 250, and then stocks like Facebook and Twitter went negative. Apple was good. Some other stuff, like Netflix was good, but it just sometimes it could hurt. But again, hedges are good when you need them and not when you don't need them.
Yeah, I kind of I feel that sentiment. I did have one on, but I just right before the number, I just didn't like the way the market was acting, and I covered it. And fortunately, it was good. It helped out. Being long would have been the right thing to do, but you never know in events like that. One more chart before we let you go. And Dennis, my co-host, I think you've been on with him before, is telling traders to keep an eye on lumber liquidators. He says the chart's looking itchy, and what that means, one more shot's asking, itchy is just when you have like after a big move, a consolidation, just inside days here. Boy, itchy. He's thinking maybe just a breakout to a little bit of a breakout to the upside here. I know this one's been dead money, but do you have any thoughts on LL Lumber Liquidators?
Yeah, well, LL could kind of be like what happened with Yelp. The stock's been battered and bruised from 70 all the way down. We had one until gap, from the 50 down to 42, and then another one, and then another one. And if you're still short this stock, you're playing for it to go to zero. If it's not a zero, and let's just say some big guy comes says I'm taking a stake in this thing, and the technicals above 29.20 is the gap, and all of a sudden, boom, you have a $3 trade. So with this one, know what's out there news wise. If all of a sudden, some big guy that has credibility, maybe comes in and buys it or buys a stake in it, it'll show you that it's not a zero, and then you can get your potential trade into that gap, and you're not caught in the mess. One man's trash is another's treasure if your entries and exits are better. And right now down here, I wouldn't say you sit in it. If you're anticipating something, maybe you go buy some calls just in case you think something could happen, overnight or when you're not at your desk. So this way, your risk is premium paid. But then if you're at your desk and something comes out and you see heavy volume come in and you see actually hold up for more than 5 minutes, you would think that some shorts get squeezed and you can get a extra cash flow trade from down here.
Notice when I asked Scott that question, he just talked about the risk. The risk of being short at these levels, covering, looking for these kind of things. Like if you were sitting in a lot of profits in Yelp and had the big rally. Not necessarily he's taking a shot on the long side. or whatnot. But, being short in a hole like this is, he's always talking about risk. Well, we've been on the line with Scott Redler. He's chief strategist at T3 Live and T3 Trading Group. If you like hearing Scott's daily take on the market as well as key levels, subscribe to Redler All Access and get Scott's morning note, private Twitter feed, and daily video. You can call 1-888-998-3548 and mention promo code REDDOG for $101 off the regular price. Scott, a pleasure having you on. As always, we'll talk to you again next week.
Sounds great. Have a good one today.